Happy Friday, everyone. The stock market is heating back up again and things are looking nasty. The heat map today shows so many stocks deep in the red. We have big name companies like Amazon down 4%, Apple down 3%, Google down 5%, and Nvidia down over 8%. This is crazy. So basically what happened today is obviously the stock market tanked down as a whole. It's down around 2.7% right now, but this happened as the Jackson Hole Symposium continued and Powell spoke. Honestly, Powell did not say anything jaw-dropping. He didn't have any crazy new opinions or anything like that. But essentially the main thing to take away is Powell said that the Feds are going to do what it takes to get inflation down. And this is not a bad thing. Rates will continue to rise, and that's kind of needed in order to calm down inflation. And this is not a bad thing in my opinion, because if we don't get inflation under control now, we will have a much worse problem 5 years down the line. So anyways, Powell said that they're going to do what needs to be done to get inflation under control, and there might be some pain in the short term because of that. So that was the main event. To be completely honest with you guys, I am not attributing this giant drop today in the market solely to the Jackson Hole event with Powell speaking. I think there are multiple factors that caused the market to move the way it did today. And the main one being just what happened in the stock market over the past 2 months. Let's look at the S&P 500 from the low to the high. It's up nearly 20% in 2 months. That's a very big move for the S&P 500 over 2 months. Nothing jaw-dropping has happened over the past 2 months to justify a 20% move. And let's even look at big name companies like Apple. Apple, from the low to the high over the past 2 months, is up around 35%. That is insane. This is not sustainable. So it's Apple's low is at 120, 129 or so, and it ran all the way up to 176. It's still at 164 right now. So it's we are going to see volatility heat up and increase in the short term. That's very realistic in my opinion, and that's not a bad thing at all. That should present a bunch of great short-term trading opportunities. One thing that I see while looking at the SPY is I think it's very realistic to see a retest of the range between 390 and 400. That's a short-term, I guess you could say, trade setup I'm looking at. I'm really considering SPY put debit spreads or something like that. I don't love the idea of just SPY puts by themselves because it might take a week or two or maybe 3 weeks for the SPY to retest this zone, if ever. But I am slightly bearish on the SPY for the short term. The stock market was just overbought. It's as simple as that. You can't have an almost $3 trillion company like Apple up 35% in 2 months when nothing has really changed about the market or Apple. So it's we're just overbought right now, and I think that we're gonna kind of just revert to the mean and just get back to the levels that Apple and the market should be at right now. So for the short term, I am definitely expecting increased volatility, and I am slightly bearish. Now, with everything being said, I'm a little bit more worried about certain stocks compared to others. Specifically, I'm looking at Nvidia and AMD. Nvidia is a powerhouse company, and they're actually leading the market down today. They're down 8% today, 8%. If we look at Nvidia a little bit deeper, we can see that they actually reported earnings this week, and they were all over the place. At first, they went from 173 all the way down to 163, and then all the way up to 180, and now they're all the way back down to 164. They're all over the place, but they can't hold the levels that they originally were trying to break out above, right around 178 or so. On top of that, there's just bearish momentum in the market right now. So I'm keeping a very close eye on Nvidia and AMD over the next couple weeks. They are looking relatively weak, and they have relatively high momentum and it's to the downside. So they're close on my watch list right now. They're big moving stocks, they're volatile, and normally they present a lot of great opportunities for short-term trading. So I just wanted to share that with you guys. But for the SPY, I'm definitely slightly bearish for the short term. I'm not someone saying like, all right, the world's going to end in 2 months, the stock market's going to zero. Like that's not my opinion. I'm just saying, when you have a big drop down, you should normally see a decent sized pop back up. But I think the pop up that we saw was taken way out of proportion. Like, you can't have Apple up 35% in 2 months. That's not sustainable. So I think we're going to go to more sustainable levels, and we're going to see the market in a lot of these big name stocks tank down a little bit. So here's my opinion. Let me know if you guys agree with me or disagree in the comments down below. Definitely let me know your opinions, and join the StockedUp Discord chat. It is completely free. It's that first link in the description and the comments down below. We have a bunch of great people in here. We have free day trades every single morning and a news channel that's quicker than like most mainstream media channels. And it's free, so definitely join up. Besides that, if you're new here, make sure to subscribe and have a great weekend.